sponsored by Anzo Capital, and we actually run a Forex Academy to enable both experienced and also new traders to understand the workings of the financial markets. So it's an opportunity for you people to understand the basics of Forex down to the advanced level, and then in no time, you can start making money for yourself comfortably from anywhere, the comfort of your home, at your workplace. We are going to expose you to secrets of financial success. So it's very important you take your time to learn and also dedicate your time to study too, because these are our sessions are going to assist you to become a profitable trader. So to kickstart, we want to move on to the next section, which says, what is Forex? So basically, Forex is a global financial market that allows people to trade currencies. Now, if you think that one currency will be stronger versus another currency, and in your thoughts, you end up to be correct, then you will make a profit. So it's more of like you're speculating. If you're speculating that this particular currency in 2 months' time will gain value, then you buy that currency. And in that 2 months' time, that particular currency now gains value, and you sell up that currency, you have made a profit. Now, we need to understand that foreign exchange, which is also known as Forex, the short form is Forex, but the full name is foreign exchange. It can be divided in two parts. Now, the first part is the traditional foreign exchange, and the second part is the OTC, which is over-the-counter foreign exchange. We're going to be discussing these two parts, and we're going to understand which one are we going to be focusing on. Both of them are foreign exchange patterns or foreign exchange methods, but we are going to be focusing on one. So let's understand what foreign exchange is, or the traditional foreign exchange. Now, if you have ever traveled out of the country, probably those of us who have maybe visited other countries, you understand that when you are at the airports, you need to actually go to a currency changing booth where you can actually swap your Naira. If you're moving out from Nigeria, you have to exchange your Naira to the base currency of that particular country you're going to. Let's say you're traveling to the UK, you need to convert your Naira to pounds. If you are going to the United States of America, at the airport, you need to convert your Naira to dollars. This is because Naira is not spent in those countries. Now, whenever you are on those counter, or whenever you're on the counter at the airports, you understand that you see exchange rates that are listed on dashboards. Now, it's not left for you to know the particular exchange rate that is prevalent as at that day and how much your value of Naira will be in either dollar or in pounds. So basically what you are doing there is what they call foreign exchange. And the exchange rate is relative to the price of the two currencies from two different countries. So the rate at which, or the value of your Naira will be exchanged to the dollar is known as the exchange rate. So basically that's actually a part of the traditional foreign exchange. The one you do, there's a physical location, for example, the airports. Another example of traditional foreign exchange is the local BDC. Like in Nigeria, there's the black markets, which we normally see at the Aboki FX. So you see them on roadsides or strategic locations. You can easily just convert your Naira to dollar or pounds, whatever currency that you want to buy. Or you can, if you have a foreign currency, you can easily just sell off to those people. So traditionally, it's actually what you guys are doing is what they call traditional foreign exchange, because there is a physical location, there is an agreement, and then an exchange is done. So it's actually called traditional because there's always a physical location attached to it. But OTC is what we're going to be focusing on. And OTC simply means over-the-counter foreign exchange. And we're going to understand how we trade, or we traders need to be focused on OTC and how we can make money through trading with OTC. Now, what is OTC foreign trading? The forex market is considered an OTC market due to the fact that the entire market is run electronically within a network of both banks and non-banking financial institutions over a 24-hour period of time. And it also means that the FX market is spread all over the world. and there is no central location, just like the traditional FX. So you can trade anywhere as long as you have an internet connection. So I think Mr. Patrick, you are just joining now. Can you hear me clearly? Please, if you can hear me, reply by saying yes, I can. Mr. Patrick Ikechukwu, if you can hear me, please reply on the chat box by saying yes, I can.
Yes, I can.
Okay, thank you very much. So as we move ahead, we understand why over-the-counter trading is actually what we are focused on as traders. That's what we're going to be looking at today. So basically, we're going to understand that only a tiny percentage of the currency transactions that happen in the real economy involves the international trade and tourism, like the airport example that we mentioned above. But most of currency transactions that occur around the world is done for speculative reasons. Now, currency traders, who are also known as currency speculators, they buy currencies, hoping that they will be able to sell those particular currencies at a higher price in the future. Yes, the traditional FX that we spoke about, which is you holding maybe your pounds or your dollar and going to meet an exchanger at a particular location to do an exchange. It's only a tiny percentage of that is done all over the world. Basically, the FX that is done globally is the one that is done for speculative reasons, where people actually predict that, okay, this particular currency or so will actually gain value over this time period of time. And at the end of the day, when they are correct, people actually make profit from that. So we're going to understand how large the FX market is. Since we've already said that it's done globally, we're going to understand how big is the Forex market. So it's something that we're going to look into now. Now, the foreign exchange market is the largest market globally, with over $6.6 trillion a day traded volume. And apart from the fact that it's a big market, it doesn't close from Monday to Friday. It's only on weekends that the foreign exchange market closes. So it's open for 24 hours a day, 5 days a week, and only closing down during the weekend. So at the end of each business day, the market doesn't close. Rather, it shifts to a different financial center around the world. For example, at the end of each business day, the FX market may shift to the United States. Then at the end of the United States business working day, it may shift to Asia. Then at the end of Asia's business working day, it may now shift to Europe, just like that. So from Monday to Friday, that is how FX market works round the clock. But Saturdays and Sundays, the market is quiet and is off. I don't know if you are following. Please, if you are following, you can reply by saying, yes, I am. And so that I can know if you are carrying everybody along. So are we following up with the class? Okay, I need more responses. I need more responses. Thank you, Mr. Ernest. Thank you, Mr. Patrick. I need more responses. If we are following, so that we can carry everybody along. We have a bit of things to discuss today. So it is important to note that you need to understand the fundamentals of FX if you are to trade and become a profitable trader. It is not just probably bringing your money, investing and trading. You need to understand the basics. You need to understand the fundamentals, and this is what we're doing. You need to understand how the FX market works in the real world and how it is now transposed into the MT4 chart or the MT5 chart, where you are now trading and making big funds for yourself. So let us understand what is traded in Forex. We now understand how big the Forex market is. Now, what is actually traded in the Forex market? The simple answer is money, specifically currencies. You are not buying anything physical in Forex trading. So it can be a confusing concept, but we're going to try and make it as simple as possible. Now, let us think of buying a currency as buying a share of a particular country. I don't know, do we know what shares are? Please, do we know what shares are? When you say you are buying a share of a company, do we know what, if you know what a share is, you can just reply by saying, yes, I do. Do we know what shares are? Okay, Mr. Ernest, can you just give us a brief description of what the share is? Just a simple, just a sentence to explain what the share is for everybody to understand. It's more or less like an interactive class. Yes, owning part of the capital base of a company. That is correct. That is correct. So basically, when you buy a share of a company, you can similarly compare it to the way you trade Forex. Now, when you buy a currency of a particular country, you're simply buying a share of that country. Now, the price of that particular currency is usually a direct reflection of the market's opinion on the current and future health of each respective economy. Now, what does this mean? Dollar compared to Naira. We can see that over the past few weeks, we can see that the Naira has been appreciating value because the market opinion was that dollar is now available. The government was making dollar available to the common man. So since the dollar is available, the economic term says that when the supply is high, price tends to fall. So psychologically, the market is actually reacting to the availability of dollar, which is reducing the value of the dollar. So the naira was appreciating little by little in value. But just yesterday, we saw that the reversal was the case. So the dollar is now gaining back against the naira. So this price fluctuations is actually a reflection of the market's opinion. Who are the markets? People who are exchanging, people who are buying and selling. They are actually having an opinion that, oh, the dollar will gain strength. Oh, the naira will gain strength. And that is affecting the price of either the dollar or the naira. And that is why in Forex trading, when you say buy, the US dollar per se, you are basically buying a share in the US economy, and you are speculating that the US economy is doing very well and even gets better as time goes on. Now, probably in future time, when you sell those shares back into the markets, hopefully you will end up with a profit if your speculations are right. So in general, what we're trying to say that the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy when compared to other economies. A typical example is Nigeria. The exchange rate around today is around 1,152. So that goes to tell you that the US dollar, $1 in the US economy is equal to 1,152 naira in the Nigerian economy. So in real sense, it means that the US economy is far better than the Nigerian economy. So if the naira is trying to appreciate value to be at par with the US dollar, it means that the Nigerian economy is trying to build itself so that when it comes in terms with the US dollar, the exchange value will actually be there will be a little difference. But when the difference is high, you understand that yes, the Nigerian economy is moving backward while the US economy continues to flourish. I don't know if we are following. So let's move on. Let's understand what we are trading in Forex. Remember, I said it's very important you understand these basic concepts because it's going to assist you in your journey or through these classes that we are going to be going through. Yeah, thank you very much, Mr. Ernest. Now, let's understand what we trade in Forex. Now, basically, we trade Forex, which is currency pairs. We have about 80 currency pairs that are traded in Forex. Then we also have bullion. Under bullion, we have gold and silver. Then CFDs. Under CFDs, we have oil and world indices. Commodities. Under commodities, we have grains and softs. So basically, these things that we are trading here on the OTC, which is over the counter forex trading, are not physical. You're not trading physical gold. You're not trading physical cash. You're not trading physical oil. You're not trading physical grains or softs. Rather, you're trading the value of those instruments. They are called instruments. For bullion, CFDs, commodities, currency pairs, they are called instruments. So we are not trading them physically, we're only trading the value. So as we go further, we're going to understand how we trade their value and why they are traded in pairs. So the next slide, we now go to major currencies. Now, since we are new traders, it is important for us to start from the grassroots. So basically, as a new trader, you're going to be starting with trading currencies. And when we talk about currencies, you're going to be trading the major currencies. If you can see my slide, you can see that that's a picture of the world map. You get to see different currency indications of the different countries available. Like above here, you can see CAD, USD, GBP, EUR, CHF, AUD, JPY, NZD. These are currencies of 8 nations. If you count them, 1, 2, 3, 4, 5, 6, 7, 8, they are 8 in number. So they are called the 8 major currency. We're going to understand why they are called major currencies and what importance they have for us traders. So why are they called major currencies? Now, they are called major currencies because they are the most heavily traded currencies and they represent some of the world's largest economies. So basically, most people who are trading Forex, they trade the majors. And when they say heavily traded, about 70% of the world population of traders, what they trade is currencies and major currencies. And we consider the 8 currencies, which are USD, EUR, GBP, AUD, JPY, NZD, CAD, CHF, all of them are called the majors. Now, why are they called the majors? Let me just ask again. Why are they called the majors? I'd like to hear a response. Why are they called the majors? Can I get a response? Why are these 8 currencies, why are they called the majors? Based on what we've been explaining. Okay, Mr. Patrick, they are well known worldwide, okay? Yeah, Mr. NS, because they are the currencies that are accepted in most countries. Okay, that's correct. So basically, yes, if you take the US dollar, Euro, GBP, AUD, JPY, these are currencies with world economies that are very good. So we are going to list them, their symbol, what they are used for, what their symbol names are used for, and how they are represented in the next slide. So you can see the 8 currencies listed. This is the code of the currency, the country, the currency itself, and the nickname. So basically, the USD stands for United States, and the currency is the dollar, and the nickname is the buck. The EUR, the country is the Eurozone, the currency is the euro, and the nickname is the fiber. The JPY, country is Japan, currency is the yen, and the nickname is the Japanese yen. Then GBP is Great Britain, currency is pound, and it's called the cable as a nickname. CHF, country is Switzerland, the currency is franc, then the nickname is the Swizzy. CAD is Canada, and it's also dollar, also known as the Canadian dollar, and then the currency is loonie. AUD is Australia, they also use dollar, and then it's Aussie, the nickname. NZD is New Zealand, also use dollar, and their nickname is the Kiwi. So basically, we're going to see how we can pronounce or we can understand how they are represented. So currency symbols have 3 letters, as we have seen. The first 2 letters identify the name of the country, and the third letter identifies the name of the country's currency, usually the first letter of the country's name. Now, NZ, for example, stands for New Zealand. Then D is the name of the currency. So D stands for dollar. So it's easy enough. So NZ is New Zealand, and D is for the dollar. Then if you go back to that example, US is the United States, D is for the dollar, EU is the Eurozone, then the R is for the euro, then JPY, Japan, and the Y is for the yen, just like that. So you can understand that these eight currencies are world powers. In terms of economy, their economy is very good. And that is why most people or their currency is heavily traded in the Forex markets. Now let us understand why you need to trade Forex. Why is Forex attractive? It's attractive because it can be flexible, it is highly liquid, it is simple, and also it is the largest tradable market. Now let's understand the flexibility in Forex. Now the flexibility in Forex can be seen with the way the market works. Now the market is open 24 hours a day, and it makes it a great work around the clock. With your existing commitment, you can actually trade Forex any time of the day. There is no trade restrictions. You can use small size accounts to trade, and it can actually be a source of a long or short-term income for you. So it's very flexible to trade Forex. Then secondly, liquidity. What does liquidity mean? Forex is actually the most liquid market in the whole world. It is instantly you can get into a trade and get out of the trade. There are always going to be buyers. There are always going to be sellers. There is no time limit, no waiting, no penalties. You can hold positions for seconds, minutes, hours, days, weeks, or months. As we go on, we're going to show you how this replicates into equity. It simply means that whenever you have a trading account, you can easily trade and make money at any time of the day, as long as you are trading within Monday to Friday. Weekends are aside, you can make money anytime of the day. You now need to now understand how trading works to now make that money. Now, simplicity. You have low requirements to trade Forex. All you just need is your personal computer, your mobile phone, a good internet connection, a flexible startup capital, and a reliable broker like Anzo Capital. With that, you can start trading Forex. Now, let us look at something very, very important. How do you trade Forex? If you can see my pictorial representation, you can understand that there are different ways to trade Forex. Now, this is a currency trader. A currency trader has four things he or she can trade. A currency trader can trade futures. A currency trader can trade options. A currency trader can trade ETFs. A currency trader can trade spot FX. But because we are new to foreign trading or Forex trading, we are going to be focusing on spot FX. Then under spot FX, we can trade retail Forex, CFDs, and spread bets. We're going to understand how these can be traded. Just 1 minute. 1 minute. Okay, sorry, I had a little technical difficulty. Please, if you can hear me, reply by saying yes, I can on the chat box so that we can continue. Oh, thank you very much, Mr. Benjamin. Thank you. Okay, I can see that some people are just joining. Mr. Benjamin, you were not here at the beginning of the class. Same with Mr. Dominic. I think I've been here with Mr. Patrick and Mr. Evans. I feel you are also late for the class. Mr. NS has been here with me. So don't worry, the recordings will be provided to us at the end of the class. So basically, we were talking about how to trade Forex, and we understand that a currency trader, based on my pictorial representation here, has four options of trading: futures, options, ETFs, or spot FX. But basically, we are going to be focusing on retail Forex because this is where you and I fall in the financial markets. We're going to understand how you and I are retail Forex traders and how we can profit or benefit from trading as retail Forex traders. So basically, let's understand what retail Forex is. Now, retail Forex is also known as a secondary OTC. OTC simply means over the counter, like we explained earlier. It's a market that provides a way for retail in brackets, poorer traders. Poorer traders here doesn't mean it's not an insult. Rather, it's trying to say that normally people who trade Forex or people who are meant to trade Forex are the big banks. For example, the JP Morgan, the Wells Fargo, the Citibank. I don't know if you know those banks. JP Morgan, Wells Fargo, Citibank, Chase Bank, BNP Paribas, HSBC, Commerce Bank, Deutsche Bank, Bankwire, Standard Chartered, Morgan Stanley, Bank of America, Barclays. Do we know these banks? So these banks are also known as, okay, just want to say, okay, yes, advanced, good, good, good. So these are actually what they call, these banks are known as liquidity providers. They are known as liquidity providers because they are the ones who control the FX markets. They are the ones who trade FX. So you and I, we cannot easily trade Forex because we have these banks trading with billions, millions, and trillions of dollars. But you and I, we are coming with our 100, 1,000, $5,000. So it's actually not possible to compete with these banks in trading. So that is where access is now granted by Forex trading providers, like you can see in the slide. Now, who are Forex trading providers? Now, Forex trading providers are known as the primary OTC, over the counter, primary over the counter market providers. They actually now, on our behalf, they find the best available prices of a particular currency or instrument apart from currency, because it's not just currency we trade in FX, like we have learned earlier. We also trade gold, we also trade commodities. So what Forex providers do is that they actually find prices from these big banks and then add a markup, then display those prices on their trading platforms. So an example of a Forex trading provider is Anzo Capital. Forex brokers are also known as Forex trading providers. So the same way people who trade in a retail store or somebody who has a small shop or who sells in a retail shop goes to the wholesaler and buys market from the wholesaler. And then if he wants to sell to his customers, he will add his own little price on the goods that he has bought from the wholesaler so that he can actually make profit from his sales. That is how brokers are to you. Brokers are like retailers who buy from the wholesalers who are the big banks or the secondary OTC, and then they now sell to you and I, who are all the customers or the, will I say, the individual traders. Do we understand, or are we following up with the class? Yes or no? I would like to hear responses. Are we following up with the session? Good. So I'm trying as much as possible to make it very easy to understand because it's good you understand these basics. From the basics now, we can now climb to trading Forex proper. But you need to understand that this is the secret of how this business is done. So Anzo Capital is a Forex trading provider. So we actually find the best price of both commodity and currencies, and then we'll now display it on our MT4 platform. We're going to learn what an MT4 is. We have both MT4 and MT5. We'll now display it on our MT4 platform for you to now trade. Do you understand? So basically, a retail trader always remembers that, or as a retail trader, you need to have in mind that whenever you place a buy or a sell with a broker, you are actually trading a contract. Now, it's not just a contract, it's a leveraged contract. Now, what does leverage, or what is leverage? Leverage allows you as a retail or small or poor trader, like we explained, to control a large amount of money or a large amount of currency for a very small capital that you have in your account. Now, Anzo Capital, for example, we give you leverage that is as high as 1:1,000. And that is why you can open many positions of either buy or sell that is valued up to 50 times of your initial capital or initial required margin. So with $2,000, you can open Euro USD traded at a value of 100,000. So with $2,000, you can actually trade a standard lot. We are going to also learn about lot sizes in our next class. So just bear it in mind that with your small money, a broker gives you leverage so that you can now trade. Because normally, you cannot trade with little money. But because the broker is not giving you that leverage, like a loan, they are loaning you more money to trade. That is why you can now make with $1,000, you can make $5,000 in a trade. With $100, you can make $500 in a trade. It's very possible in the Forex. That's because the broker now gives you this leverage. But there are many things you also need to understand before you get to that level. So as we go on, we are going to be delving deep. Now, let us understand the basic requirements of trading FX. Now, you need a mobile device, a good internet connection, and Anzo Capital, which is the best broker platform that you can use. Then your startup capital, the advantage of relative stability in Forex is that you can actually start with a small amount of capital with as low as $50, $100, $200. You can start trading and start making little profits and go on. So Anzo Capital offers you the best operation and best service in terms of brokerage services. So you need to act now by opening an account with us to get started. Because in our next class, we're going to be moving on to how we can actually start calculating pips, opening the MT4, and it is only those who have accounts that can actually open an MT4. Then we now understand how to navigate our way around the MT4. So I would just like to ask a polite question. Mr. Benjamin, Mr. Don Cattel, Mr. Evans, Mr. Ernest, and lastly, Mr. Patrick, do you have an account with Anzo Capital? Yes or no?